All right. Good morning, everyone. Dan here from tradingology.com and the trading room for April 8th we got today. And Dave from the Strong Market team will be joining us as well, our usual co-host. So good morning, Dave. Good to see you here on this fine Thursday.
Good morning, Dan. It is a fine Thursday. Beautiful weather here.
So yeah, I sent that 80 degrees right on over.
Thank you. Keep them coming.
Happy to help. Good morning, Andre. Good to see you. Got some interesting stuff. I keep referring to these ways of finding levels, so we're going to touch on that a little bit later today. We'll quickly look at the headlines, and Thursdays are famous for our unemployment reports. So as soon as I can find my browser again, there it is. We'll swing it on over. We were expecting 682. Oh, but guess what? We got almost 750,000 once again. 744.
Incredible.
So that has yet begun to dip to any type of low number. It's been between 600,000 and 1 million for a long time. And Bloomberg finally says something that agrees with it being negative, where it says the claims rise, showing a choppy labor market recovery. So they're not trying to sugarcoat it this time, apparently. But yeah, look at this historical data here. 1 million back in June levels, and then it finally dropped below 1 million around August. But it's still always been hovering around this 750 to 800 every week, new filings.
Yeah. Choppy is not exactly terribly negative, but it does indicate that it's moving around. I wonder what the data was after the great financial crisis, like in 2009. I think it started coming down. I think 600,000 was like the high.
I think you're right.
It started coming down. I think when it dipped below 200,000, everything kind of went back to normal, but we're still at 744,000 after over a year.
Yeah, and these are new initial claims. It's not like this is just, hey, these same 750,000 people are still unemployed. This isn't an unemployment rate.
These are new weekly claims, weekly claims.
Yeah, these are new weeklies. Yep, every week these are new people filing.
Yeah, it's crazy.
So some we've talked about in the past, the same people have lost their jobs more than one time, so it's kind of like they want to make that not count, but it's still people out of work multiple times that way.
That's right. Yeah, they're continuing claims. So if they ran out at some point, they're reclaiming. So there's still, millions and millions and millions of people, and the unemployment typically runs about 3 to 6 months
for a cycle. Yep.
Yeah. So if we look at 6 months ago, what was it 6 months ago? I wonder.
Oh, on the rates itself?
Yeah.
Let me scoot this down a little bit. There we go.
So that would be back in October, November.
October, November, right around.
Same level.
Yep.
Hasn't changed.
Almost identical, because today was 728.
Yeah.
Huh. But tech and the S&P are happy right now, but the Dow and the Russell are not happy. So we got a mixed market right now so far today. Dow and Russell down, and the other guys are up. And it definitely looks like, you'd mentioned it on Tuesday, I think, that SPX is definitely looking for 4,100. We're at 40.89 at the moment. And the ES is up 0.25%. We'll slide over the indexes here. Yeah, 40.93 is a new high this morning, breaking up.
What's the cash index? The cash index is at 40.88. The futures, and these are the June expiration futures, are at 40.80. They're trailing 8 points, so we're in backwardation. Typically, the futures are ahead of the cash index. They should be up around. I mean, fair value on the if it was. Fair value on the futures should be around 40.94, and we're at 40.80. I think you said, yeah.
Yep, 40.80 right now.
Yeah, there's something very odd going on there, because and those are the continuous contracts, so they're going to be in the forward month, which is June expiration. There is always a premium on the futures contracts because you're talking about a future expiration. And we're 13 points behind. That's not normal.
Yeah, across the board, the Dow is at 33.4. The futures are at 33.2.
Yeah. They are lagging, which is very, very unusual.
Keep an eye on it. And the other thing that we always watch for in the big indicators, right? What's our SPY-VIX doing right now? 23.7. Look how close we are to that 25 level.
Boy, we're getting there. We're getting there.
Well, one more time, if you guys haven't seen it before, if this is new to you, this is a level of previous historical. Let me blow this one up. Not that I say history always exactly repeats, but as our good friend Mike Maloney says, it often rhymes pretty well. Look at the last times it's done when it's hit up there. You know, it surpassed it. Pre-pandemic announcements, it surpassed it. Then they use that as the excuse.
Yep.
And back in 2018, when we had those drops, it had hit it right on the nose and then dropped. Then previous to that was 2018 when it got above it and then it dropped. So each drop's been bigger each time it's hit it. As we see this play out, and if we go back, and this is when we go back too far, then I think it's a scaling or a charting issue, because back 10 years ago, it's not accurate because this should be higher.
Yeah, I think it's just the way the SPY has been calculated over the years. And
Yeah,
so
the roll of SPY. So now we see it's streaking all the way up towards it, as we still have this divergence of downness that we had previously, divergence. So not saying as soon as it hits it, but it's definitely a warning sign, because if this repeats or is anything similar, this is a similar percentage drop. Or if, as we see here in the SPY itself, if we get a bigger drop than this one, 180 would be bigger drop, 200.
Right.
That's crazy town.
Yeah,
That'll
absolutely.
be chaos. That own people, that's when they say buy when there's panic. You'll see panic down here.
Oh yeah, that's for sure. If we break that low from last March, we're definitely going to see some panic.
Yep. And that's the pattern it's doing. So it may not repeat it again, but the possibilities are there. So just to be on alert.
And actually, the March 2002 or 2020 bottom, it broke that low of 2018. And so we had a massive amount of selling. We could break that low. I mean, if we see higher highs and we see higher lows, we could see another, or a lower low. We could see another lower low in the next big drop. But the volatility is everything in the market. Volatility is everything. That's why I started keeping track of the difference between the SPY and VIX, because I noticed that whenever it got over 25, or if it got under like 5, it was a great buying opportunity. When I got over 25, it was a great selling opportunity. And I mean, if you use that, if you're a long-term investor and you use no other type of potential indicator, that's the kind of indicator that you would want as a long-term investor. Because if you can get out, let's say you just go into cash and avoid all those big drawdowns, you're multiplying your investment returns on your long-term investment portfolio by leaps and bounds, just by paying attention to that one indicator.
Emails is always available, support@tradingology.com, and Dave's team over at Strong Market is awesome for support at Strong Market for any indicators. So I'm working tighter and tighter with those guys all every time, or every day, whatever we want to call it. But appreciate you guys coming out and joining us, and let us know how else we can help.
Yeah, thanks, Dan. This is great, good stuff. I love it.
Very cool. And there's your extra time, and we'll catch you guys next week. Have an awesome weekend, and Dave, enjoy your hot weather.
Yes, I will. I'm going out today.
Sweet. Take it easy, everyone.
Take care, Dan. Bye, guys.